Do you enter trades with very strong and large candlesticks, only for the price to suddenly reverse? From now on, do not enter trades in these zones, even with large candlesticks. Before we dive into the topic, I kindly ask you to watch this video and the previous ones in full. Financial markets have very complex topics, and with my experience, I try to simplify them for you. If you feel that even 1% of these lessons are useful for you, please leave me a comment and subscribe to my channel so I can reach more people. Thank you. In the past, I often entered trades with large, full-bodied candlesticks, thinking they would most likely lead to profits. However, this is entirely wrong. The most important point is to know where you are in the market. If you see a large candlestick at the end of a trend, this candlestick is not a signal to enter the market. Instead, it is a warning to exit trades or even an indication to trade against the trend. For example, look at this sample. Notice the large candlestick in this area. Beginner traders see these candlesticks and enter trades in the direction of the trend, but they are very likely to face losses. Look at another example. A very large candlestick attracts beginner traders into a buy trade, while professional traders are waiting to sell here. In this video, we will examine where on the chart we should run away instead of entering a trade when we see these candlesticks. To understand this concept, we must fully and accurately understand market cycles. I explained trading cycles in previous videos. It's better to watch those videos first and then continue with this one. Large candlesticks have historically misled amateur traders in financial markets. If you don't understand these concepts, you will definitely fall into the trap of these candlesticks. The secret of large candlesticks lies in where they form. If we are in an uptrend and after several bullish cycles, we suddenly see a large unexpected bullish candlestick, that area is most likely the end of the uptrend, at least for a short while. Look at this candlestick. Would you not enter a buy trade here? In hindsight, the future of the chart is clear. But imagine you are in a live market. You would likely enter a buy trade. This is precisely the ominous candlestick that signals it's time to exit buy trades. To accurately identify these candlesticks, first draw the cycles or use any technical method you know to map out your key levels. If you are, for example, at the top of an ascending channel and notice these candlesticks forming, exit your buy trade. Here we are in a trading channel. At the top of this channel, a large candlestick has formed. If we enter a buy trade based on this candlestick, we will only incur losses. In general, if you see a large bullish candlestick at resistance and the resistance hasn't broken, know that it's time to prepare for a sell trade. The reverse is also true for large bearish candlesticks at support levels. I also explained level breakouts in the previous video, which is a prerequisite for this one. If you trade using price action, know that these candlesticks usually form at the top and bottom of channels and the top and bottom of trading ranges. This perspective helps us analyze the market more professionally. Let's go over some chart examples to understand this lesson and review trading cycles as well. Here, we have a bearish cycle consisting of a spike and a channel. Focus on this part of the channel. We are now at the bottom of a bearish channel, right? So this means we are at support. If you see large bearish candlesticks here, do not enter a sell trade under any circumstances. Levels have higher priority than candlesticks. Therefore, large candlesticks have little chance against levels and are unlikely to break them. Here's an example in a trading range. Look at this large candlestick. Why shouldn't we enter a buy trade on this candlestick? It's clear, because it has formed at resistance and holds no value for a buy trade. In fact, professional traders are exiting their buy positions with profits here, while beginner traders are entering and recording another loss. I'm glad that from now on, you can think professionally and won't rush into trades based on large candlesticks without considering the context. Identify support and resistance levels using your preferred methods, and then observe these large candlesticks at those levels to realize how often they form and how they can trap you into losses. Thank you for watching this video. Please subscribe to my channel, like this video, and leave your comments below so I can guide you further. Wishing you success.